Good evening, everybody. Today we're supposed to do demand and supply, but because we did not, my error, my fault, I didn't record. I recorded, but wasn't able to save our first two classes. So I have to go back. So today we're going to talk about market structure and breakup structure again. Yes, those two topics are not topics that we can just teach all each day without having a recorded session in case of people that will be joining me. Because I know I have a lot of people that are joining in the advance. So please, we are going to do the market structure again today and the breakup structure. So I'll just have a rundown, not doing anything. Okay. I'm just going to have a rundown and then I'm going to look for one pair that I'm going to use. This trade has moved. Instead of start to wow. Just been off the market this day because the reefer is not doing really nice price movement. So I'm not actually trading. And when I've not been trading, I'm just looking at the market, looking at what it's doing. There's no every time you must go around packing money inside the market. Sometimes you just go and study. And this came out from this engulfing candle there, very nice engulfing candle. So I'm going to explain everything. Market structure, breakup structure, using this day. I'm going to explain everything using this. So let's say understand what we're talking about for today. The first one, we have two sides, remember. We're talking about fish, is the market structure. Under the market structure, we have the basic market structure. And then now we have okay. The first topic on this side is market structure. Let's write that out. Which we said, what is market structure? We see that market structure is just the overall movement of the market. Market structure is like you trying to understand the way the market is moving. And we said we have basically three types of structure that the market will always do. And whenever you want to trade, the first thing you must do is to take your structure, the structure of that market. We have the bullish structure. We have the bullish structure, or you can call it an uptrending market. Bullish is uptrend. We have the downtrend market, which is more of the shells. And then we have the sideward. Which you can call like a flat market or a market that's consolidated. Yes. So this is just what we have on the market structure. I'm going to draw out some things under here. Like we said that you are on a bullish structure, meaning that what do you want to see? You want to be seeing more of your buys. So you're just, what you have to do is to have the ability to interpret these buys and take your trade. Now you see that the structure here is more of the buys. As you can see, the market is the price of this asset is just doing what? Increasing. So what do you want? We just want to wait for the market to give a retracement on that page, and you look out for more buys. So we say you're looking out for more buys. What does that mean? It means that you're going with the trend of the market. It means that you're taking just buy trades. That's what it means here. It means that you're taking just the buys. Now you are going with the structure of that market. You wait for the sales to happen, and then you go in on the main thing of this page, which is the buy. That is how you move with the trend. And then we have another one to be the sideway that we talked about there. And the sideway is more of like this. The market doing something like this. Yes. This really happens on the currency pair market. For instance, let me say any the money. So but you don't have the market reacting up from zones like this. If you are putting out these zones on a higher time frame, yes, you can use them to take good trades. So that you can be buying up from here and looking out for sales up from here. These are very, very good ways of trading, but not something that I like doing. I just use them to know how the market is moving, know what the market is. They are always very, very risky because you don't know when it's going to break out. That is how the sideways is. And then the third one that we talked about is what? The sell. That is after market has given a change of character, and then you now see more of the sell. So what do you want to do? First of all, you have to sort out the market structure. And you've seen the tool I'm using to sort out market structure, right? Now, you want to be taking what now? More of the shells to the downside. Because the pair has changed character. Now that the buy is called a retracement. So this is everything we know about market structure. The market structure is just the direction of the market. Direction of how the market moves at a particular time. If you're on a bullish structure, you have to go on your higher time frame to know. You have to know which structure you're on. You have to know the structure of that market that you are trading. You don't just trade anything anytime. You have to know, am I on a bullish structure? Because, like I said, we are just like ants in the market. The market movers are those that have big effect on the market, just like institutions, big assets, the banks, they are those that are the major players here. So when they are buying, why are you looking out for sales? It is the market structure that will help you know, are they buying? What are they doing exactly? That is what the market structure is going to help you to do. And the next thing that we did on our second class was what we call break of structure and the change of character. So let's just focus on break of structure, then we'll go to change of character later. So when we say break of structure, what do we mean by break of structure? We're saying that break of structure is the continuous movement of market in a particular direction over a period of time. Yes. And then we know that we have two types of break of structure. You can just say that we have the market breaks to the upside or the downside. Yes, we have the upside BOS. Okay, let's talk more like traders. I say the bullish BOS, and then we have the bearish BOS, right? Yeah, the bullish side BOS, whereby it is this one now, more of the buy side break of structure, the market breaking of structure to the upside, and then the bearish BOS, whereby the market is breaking down to the downside. And let's look at how the bullish BOS is. It's more of something like this, whereby the market comes to a low point. Very, very important. The market must be coming from a low point. If the market does something like this, I don't see this as a break of structure. I saw some of you marking this out as break of structure on the assignment I asked you guys to do. Yes, we talked about the Fibonacci tool now. So what is the Fibonacci tool? So that Fibonacci tool is the tool that helps us to know the extent of a retracement. So how do we use the tool now? Let's say this is where you are on this swing in the market. You know? Let's say you are coming from here on this swing, and you want to know where you want to buy from. Because what did we say? We said that we are on a bullish market, so you want to look out for more buys. Obviously, use your Fibonacci tool like this, and we say that this zone is what we call a premium zone to the T-day, and this zone is called a discount zone. So if you are a buyer, you want to be buying every time. We always hear discount, 5% discount. As a buyer, you want to buy phone. You hear that phone is 70,000 today, but tomorrow the phone is going to be 60,000 because of 10% discount. Obviously, you are going to wait from today. You wait till tomorrow that this phone is going to be 60,000 naira. So that you don't want to buy that phone at 60,000 naira. That is the clearest definition I can find out. You don't want to go and be buying a phone at how much? 70,000 naira, when you know that you can buy that phone at a discount of 60,000 naira. That's the Fibonacci tool that is always going to help us know that this is the line here. This is the 50% line here that you always want to make sure that any buy you are taking, your buy should have tapped into this zone before it gives you that you start taking that buy. You don't want to start looking out for buying here. Yes, there are some models that people take the resistance to support here. Yes, but it must still be from your 50%. That means that maybe this one is now all the way up here. So if you're using your Fibonacci tool now, from that low to this high, yes, it is now your 50% zone, and you can now use it. So you don't just say when you see break of structure, you mark it out. Listen attentively, I'm saying that again. You don't just go around marking out break of structure at any zone. The break of structure you're marking must be everything correct. Having a Fibonacci zone and reacting from somewhere, which I'll show you guys on the chart. So this is a break of structure, the upside. And this is where's the break of structure. This is a break of structure. And we learned that we call this thing what? A high zone, and this one is called what? A higher low. Yes, on the break of structure, this is the high. This point here, this point here, this point here that the market created space before it broke out. It's called a high. And in this lowest point that the market created, that this doesn't have any name. Look at what I'm going to do now. At this point, this does not have any name. Because it has not done what? It has not done what? It has not broken a structure. So this doesn't have any name at this point. Yes. But when it breaks this structure, that is when we can call this a higher low. That has given us what? A higher high. This is now a higher high. How many things have we talked about? On the bullish side, we talked about a higher high. We talked about a high, sorry. Then we talked about the higher low. Then we talked about what? Higher high. That is for the bullish trend. Yes. So that this is the high, this is the higher low, this is the higher high. So if you want to take out a buy, what do? You look for a retracement. And then you continue for the buy. You want to take out another buy, what do? You use your tool again. That is how you do it. And you wait for what now? A zone that you are going to learn in our next class, which is called a demand zone. When you understand all these basic drawings, there's nothing that's going to stop you from being very, very profitable in the market. Yes, you first have to understand all these things. You cannot just jump and go and become successful. You have to understand the basics of the market. And that is what we are doing now. So anybody that is joking, I don't know, waiting for magic, that's on the person. Yes, because this is the very, 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 very basic that we was made. This is for the uptrend. Let's look at what we can do for the downtrend. The downtrend is now more of the market coming down. Yes, and this is called what? A higher low. This is called a lower high, and this is called a lower low. Now, where do we spot out the break of structures now? We spot out the break of structures away, the downside. And then what do we do now? We want to look at a premium level for the sell. Sellers always looking for how the price will go high. Sellers don't want to be more of discount, because now their money is reducing. If you are a seller, you want price, the fuel price to increase. Yes, you want filling station people now, they are looking for how the price of fuel or the price of a particular community is going to increase so that they make more profit. So you don't want to be selling at a discount now. You want to be selling more at a premium level where you are making more money. That's just the logic of the market. That's just the logic of the market. Buy at a discount zone, sell at a premium zone. When you do like that, sometimes you see the market doing this type of thing. If the market was giving this type of link here, doing like this, and then the market just starts thinking you see a clean boom, do something like this. That tells you that the market has gone up and is doing what the market will always do, which is reacting from where? The discount a premium level now for the seller, because they are reacting up from where? What we call a demand zone, which we are going to learn in our next class. To give us what? Another break of structure, which you can see here. The downside. That's how long did this thing, because the market will not be as straight as what we are drawing out here. Give another break of structure to the upside. Now the sales, that is how you look out for more sell trades and take them. And the buys, this is how you look out for more of the buy trade and take the buy trade. So I've talked about break of structure, and then this one, what do we have here? Have the low, we have the lower high, and we have the lower low. Did I point them out? This is the low. This is the lower. This is the high. This is the higher low. This is the higher high. So this is going to be a low, a lower high, a lower low. That is just it. So the next thing we're going to look at is what? Looking out at what we call a change of character. Change of character, you see the break of order, the movement of market in the same particular direction, market moving in the same direction over a period of time. What do we want to call a change of character? Don't think that this class is every time it's only me that's going to be talking. When we are done with this basic, the next class, sometime I'll not even talk. So you guys should just be keeping quiet every day, thinking that all of you, Frank, all of you here, funny, so Yanda, Samuel, you guys should just be thinking that this class is funny. No, 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 no. Yeah, all of you are just muting your mic. Continue muting your radio. The day I'm going to mute my own like this. Then I mute my mic. It's going to be for all of you. You get. So you guys should just be prepared. Because the big days will just have just questions. Those are very, very easy. Sometimes we'll have classes in the daytime. So you guys should just be prepared. Change your character. And then we have under the change of character. What did I say the change of character is? Change of character is now what? The market changing in particular direction. Yes. Well, what do we say the market changing in particular direction? Market was bullish over a period of time and then it changed to do what? Bearish. Market doesn't just go up like that and be bearish. People want to wait for those changes and take trade. So let's understand it using our chart. Where we say that this market was bullish and then we have a high, we have a low, we have a high, we have a low, have a high, you are just taking the buys, we have a low, and then we have a high here, have something like this, that value is low, you wait for the main thing, and then we have something like this. Yeah, whenever this happens in the market, you want to pay attention because the market is not supposed to break a respected low that gives you a nice change of character to the upside, a nice break of structure to the upside, right? You don't want the market to do this type of move. So when the market does something like this, what do we watch out for? We watch out for how we want to take trade, right? We want to take out sell trade now because the market has changed character. Note, this is basic market structure. On advanced market structure, we call that a strip of liquidity. And sometimes the market still tends to move up the buy side, which we are going to explain when we get there. But for now, we're moving with what we call the change of character. So now, what do you want to see now? We want to see the market reacting from a zone that we call a supply zone, which we're supposed to learn today, but we'll know in our next class. It's not from here that I start looking out for myself. Let's talk like people, man. I will start from here and looking out for myself. Because what did we learn? We learned that if you use your tool from here to here, that is now a premium level. Whereby the sellers will now be looking out for trade. Now, what am I doing now? I'm looking out for sales. I get a confirmation from there, I sell it to wait. Now my new break of structure. If I want to take another trade now, what do? I use my tool again to now weigh the lower low, which is now this one. And you want to take off more sales from here now to the downside, of which now gives me what? A new break of structure. which is something new. That is how we want to understand trading. This is how we want to understand trading. See how we came all the way from break of structure. I'll do it one more time. For those that are still dipping garri, let's now start from the sell. The market was bearish, giving you a lower low, lower high, lower low, lower high, lower low, lower high. When we see this thing, you see that the market is respecting the break of structure. The market is not breaking any of them. The market is respecting all of them, which is very, very important. What do you don't we want to see? We don't want to see the market breaking this zone. What do we want to see? We want to see the market coming here, bouncing up here, or maybe closing it out with a little bit, and then continue selling. That is the main aim of this thing. The market continue in the direction. But then what do we see now? We see the market doing something like this, and then start giving you this. Maybe reacting from a nice zone on your higher time frame. So now what do you now know that you want to do? You want to use your Fibonacci tool like we use here. Anywhere you're coming from here to here or from here to here, you're correct. The Fibonacci tool is 50-50. This side is equal 50, this side is equal 50. Now, what do we want to see? We want to see a supply zone. Now, listen attentively. This was the last break of structure that happened here, right? This is very, very important. This was the last break of structure. Whenever I take the change of alpha, I must make sure that this trade that is coming here must come and bounce in higher than this. Sweep out this one here, this high that was here. The market should break down into it before it moves. That is now when I start looking out for what? More of shells. More of shells from where? More of buys, sorry. From here now, see that the market has done what? Change character. That is how trading works. But then, if, like I said, the market does not start break this one now, that is when I want to see as what we call advanced market structure, which is the market coming back into that zone, doing a big swing. Yes, is now we are learning to do. But for change of character, for change of character, you must see a valid tapping. Sometimes all of these things exactly in the market, just the market changing up for a particular zone to move, and then you can't change your character. No. Everything I'm saying here must be made. Every condition must be made before you call it a valid change of character. Some of these assignments, I didn't even take your assignment very serious because I did not send this recorded station. I did not send a recorded station. So after the recorded station, I'm going to tell everybody accordingly. It's going to be very, very, very serious on the group with you guys. I think I've gotten, I don't know, maybe because of the recorded session. So nobody will have any excuse. I don't want you to go and be marking out any zone anyhow on the changing. Yes. This is how we create the change of character. So let's look at it on the chart before our time will be over. So like I said, we're going to be using what now? I'm not making a mistake of doing this. Yes, I forget this recording session again. I will forget today. Let's use this chart. Now, I will go on my higher time frame. First of all, do what? To spot my overall structure. The market is not going to present itself as beautiful as you always see it. You see how hazardous it is. You see how crazy it is. But I can spot out that what is happening here. First of all, this is my low, this is my lower low. I've seen a break of structure. And then what do you see? You see the market coming to react from this type of zone here and then giving you what? A high time break of structure to downside. Now, what are we now? We are more of selling. The play has been very, 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 very crazy sell. And then we see the market now, because this is not the one we want to come and be looking at. No, this has happened and it's gone. We want to study what we call the recent price action, which is somewhere around here. That is what we want to watch out for. That's what we want to watch out for. So just keep on going on my lower time frame. Look out for trades. Look out for trades. And then the market did something that we call, what do we call it? Resistance to support. Yes, resistance to support. Give a liquidity here. All these are advances. And we learn about them. Market gave that. And then we have to just up there. So I want to show you guys break of structure and of character. All these ones are advanced in here. Now, if you want, okay, understanding break of structure now, using break of structure, we want to see this one, which is this one over here. This is the highest point that the market makes, and we are more of bullish. So any trade I want to take, this is where the market is going to get. We have seen a small break of structure that happened here, but this is now what we call a liquidity. Liquidity is just money. The market is going to take out money. Yeah, that's why when you learn the basic market structure, you still learn the advanced market structure. The two of them work hand in hand. So I've understood that the structure of this market is very, very bullish. Let me show you guys. You are seeing where the bullishness is coming from, all the way from the downside, giving like queen switch structures here. Yes, catching. This is now how you trade the basic market structure. Catching this type of move, just trading like a basic trader, you have to know from there, you have to from a low to another break of structure, and then this is not a low. Like I said, this is not a low because why? It did not give a break of structure. The lowest point now is this one. This is now the low. This is now the valid low. This is now like what we call a W pattern. The what you call a low must be the one that gave you a break of structure. That is how you understand it. That is now the low. This was a very, very nice move. So you are seeing where the buyers have been coming from. This buy, this buy, this buy. And so you just want to move on with the market. And now this is where the market is. So like I said, anything I'm taking, this is where I want to take my profit at. Anything I'm trading, this is where I want to take my profit at. So this is more of like an advanced move here, but I'll tell my very, very best. Market was selling off from here. Like I said, this was what you wanted to take out. The buy, this was a nice buy. Now you're a basic trader now. What do you want? You want the market to stop here and give you the buy to this upside. But then what did the market do? The market does keep this liquidity stop. I took this trade sell. This is all bottom. I took this trade. It took me out. I advanced trade of here also. I took a lot on this. Okay. So taking that loss now. I entered the trade from here. I was up around $20 on this small move. The market stopped me out of my $20 account. Around the market came straight up. I'd have done around, I think, $125 or something. That's my profit, my general profit on the small trade. So you must always prepare for the losses in the market because you don't know what is going on. Like I said, this was a low that I wanted the market to respect basic market structure here. But basic market structure failed me, and the market did this. Now, immediately the market stopped there and move on. I saw that place at the hip of liquidity. In that, first of all, the market must come to 60,000 before me. That was exactly what the market did. It took it out, and now it's giving that buy move. Giving that buy move to the upside. There's an advanced market structure here, which I explained. I didn't explain it very, very well, but let me just go lower and see if I'll be able to explain it for you guys. Number one, we said that a change of character. Change of character has happened here. Small change of character. Because we have seen that the market has now been selling all the way here. Yes, and then the market has been selling all the way here. We expected the market to keep on selling. But it is something around here. This is too advanced for you guys. This is something around it that we want to call, let me say, semi change of character. And then it did not come all the way down here to start buying. Instead, it stopped here. Yes. This was the demand zone. It did not come into the demand zone to start selling, just like I explained. Instead, what we do is stop here and bought up. So we waited for the market to start in here and give the main buy. This buy should be coming there. That's the main profit of all this that the market is doing. So I took this one and I think I was out around somewhere up here again. Because of what? You are seeing that it was not really moving. It's giving more of the weeks. So I couldn't hold. I held it, and I said, no, the profit was enough. So don't take your profit. The main trade I'm trying to explain to bring you guys now is this place here. This is the main place my focus is on. I'm not trying to tell you guys where the market is coming up from. The market is coming up from an advanced here, which is coming up from the market tapping into that place, and the profit is being there. So anything you want to be taken out from this trade now is more of the buy. Anything that you want to be taken out from this trade now is more of the buy. Now, let me explain what is happening where the market is currently at. Now, There's what we call advanced market structure trading, which is what happens here. Whereby we have a sweep of liquidity there. Yes, now see what happens here. The market was just supposed to continue buying, but it gave us what we call a sweep of liquidity here, not at today's class. And then give something that we call a POI, a zone you want to mark out for, look out for your buys, and then what we call the structural liquidity. Some of you should be acquainted with the things I'm mentioning here. That's advanced level. Yes. So now I've marked out my POI and I'm waiting for the market to come into my POI. Yes, I can show you guys this state before it happens. Now I'm going to be using this setup to explain basic market structure. Now look at what is happening here. We were selling, just give us a break of structure down here. Not something I'll take actually. This is where I'm looking out for my own sales. But the market started selling off at a premium level, which was always for me, this year I started looking out for myself. So, not something I like. And then the market was selling. Now let's take it straight. Look at the market. This came here, sold off. This was now selling. Look at it. Pay attention. Let me zoom in. Pay attention, please, my brothers. This is very, very, very important. The market was selling now. I know that you are at a POI, so you want to catch out trades. Yeah, that's what you want to do. You want to take more trades, you want to catch out trades, right? Now, which trade do you want to see? Buy. Like I said, the market is going to react from somewhere to start to give a change of character. That's why you know that you are ready for the trade. Change of character don't just happen in the market. You just see the market moving like this and you now say you now want to observe a change of character. No. Something must happen that we need to change of character. Which is now what is happening. The market reacting from what we call the demand zone, which will be in our next class. Yeah, because I don't know very like cannot see what we call a change of character here, please. Now, where is the last low? Was this one? This gives a break of structure. The downside, right? So what do we expect? The market to come here and do what? Continue selling. But instead, what do? The market broke off that zone. Right? That's very, 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 very important to me. The market broke off that zone. That's why you want to start observing that change of character. Which is very, very interesting. Because now, you are looking for how the market is going to change character. And the market did not even change character. The market did not even enter your POI. This is my POI. This is what we call the POI. The market didn't enter my POI. But we get a change of character here, which I want to update, which is this one. So you know that all this are not happening in the market. Now, this is the low that I had. And then once the market took out this low like this, you want to start observing it. That was the first change of character that happened. That was the major change of character that you want to observe. So you want to see market doing what? Reacting from a supply zone which we talked about. Now, this is now the supply zone here. And this is the market reacting from that supply zone to break this now. This is now what we call a break of structure, right? Market gave a change of character, gave a retracement, and now gave what? The first break of structure, which are now told us that what is happening now. The market is no more selling. Please, you have to go and watch this video again and again to see how I got it. Look at now, was this buying from a premium level, from a discount level rather? Yes, this is the discount level. Just gave a little takeout from here because of what? My supply zone. This is the discount level trade, and it boom all the way to the upside. Now, why would you go and be looking out for sales? You've seen a first break of structure for the buy. That obviously tells that the buy is coming from where? All the way from here, and it's going very, 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 very fast. So if you want to trade this type of thing now, you're looking out for more of the buy. You take it from here to where? The highest point that the market is at. So it's not like anything you want to trade and call it buy. It should be coming up from there. You know this zone, that's the buy you want to take it. Now, the buy I want to take, and the buy I want to take it on this page, it's going to be from that zone. Anything I want to be more of the buy way, all the way to the upside. All the way to the upside. That is the buys that I want to be taking. More of these buys. Because I've seen a change of character, I've seen what is happening in the market, and I want to just trade off with the market makers on what they are doing. Because if that is reacting from, if this one here is reacting from here, where is my take profit? This is my take profit on this trade. Yes, that's how you make money. And whenever you are correct, you see the move in the market. You're seeing the big candle move, move, see the small cells, you see the vibe, move. That's just what you want to be seeing. That is just what you want to be seeing. In your character, they're happy to know that the market has changed character from selling, the continuous sell. This is the break of structure, continuous sell. So now change of character that should give us now what a continuous buy. So we have 4 minutes left. Any question? I'll take questions. If anybody has any questions to ask, so I can save this recorded session. I don't want to need this recorded session this time around. I must save it and send it to you guys. Anybody that has any question? I need a question from somebody here. Not talking again.
When we're looking at break of structure or change of character, do we consider the wicks or we just focus on the body of the candles?
And when you say a wick, on a higher time frame, it's mostly a wick you see as a break of structure or a sweep of liquidity. That's a nice question. But in lower time frame, I like seeing the body, the market breaking the body. Like now, look at this. Look at this. This just broke out with a wick, still so gave a retracement, it broke out with the body. Okay, that's when I want to map this as a break of structure. But that doesn't mean that the wick is not a break of structure. It just gives a small wick and then starts telling us, I don't like seeing it as a valid break of structure. Till it comes back. Okay, till it comes back and gives me a nice move. That's what I want to see as a valid one. So yes, you can consider the wick, but sometimes not also you just have to be very considerate. You like seeing the body, I like seeing the body. That's the next question. Another question?
Sorry, sir, I have a question.
Okay.
So my question is, if we are on a bullish bias of the market is going in a bullish movement, and it gets to your POI, like the main POI we had here, that means every other sell structure or every other sell POI becomes unuseful.
Yeah, that's something that you must see. The market will never move straight like this. For instance, now you have this buy setup here on your higher time frame, and the market reacts from there. And then before the market reaching here, the market has made some sell POIs, right? You see, that's very, very nice. Sometimes the market can do something like this. Invalidate that. Still react from there because there are zones that the market should be interested on. But you should always think that is the advantage of market structure. Whenever you're bullish, go bullish. You can be bullish on the page, sellers are taking trades here. That's not your concern. You are bullish on that page, so remain bullish. These are now what? These sales that are here are now what we call counter trades. This is just the thing you should be watching out for. Where is the market coming from? Where is the market react from? Where am I taking my profit? So these sales can come in now as what we call counter trades and sharp sales because they are zones that the market will react off from. There are small sellers there. The market can react from there, give some nice move. And now that nice move is now like an inner trade retracement. Yes, then the market comes, retrace it, breaks that off. We have from the second one again, breaks it off and continue the buy. Yes, something like that. That's how you understand market structure and your higher time frame. So I know that your higher time frame, if you're bullish, you should go more of the buy, be more of the buy. Even if the sales happen, it should be more of your buy. Your buy is more important. Like now, I'm seeing a small sell here. Yes. But I know the market is coming out from. The market can react from there, but I don't want it to. Even if it does this. If react from there and come and take me out, it's okay. You know, maybe I was wrong in my analysis or something. But from what I know, from what I can see here, I'm more bullish on this trade. Wow.
Okay, sir. Thank you very much, sir.
I'm seeing a very, 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 very crazy sell. Nice. But I'm still sticking with my buy. Yeah, this is the liquidity, break of liquidity, retesting. I don't like it. That's something I like. So I'm going to more of the buy because of the structure that I'm coming after. That's all for all. Please, that's all for today. Thank you. Let me do the needful. I'll send the recording session. Thank you all for joining.